All right, so today, guys, what I want to take a closer look at is four AI stocks that I believe are giving me some form of opportunity to do some form of dollar cost averaging at the moment. You guys know me, I'm huge into the tech market, huge into AI, huge into semiconductors, and I'm actually pretty happy. It's weird, right? Obviously, I'm an investor and I like to see my stock prices go up. And I feel like this month of August, we're kind of seeing a bit of a weakness in the market, especially in the tech space. And that gets me excited because, like many of you, right, I do kind of a dollar cost averaging on a weekly basis. So I can't always open up with a big position right off the bat. So I like to kind of wait over the time to see when I might get some buying opportunities. And I do believe the market is giving me maybe small buying opportunities at the moment. So let's take a closer look at these four stocks. All right, so the first stock is no stranger to this channel. You guys know I'm huge into the semiconductor space, and that is going to be Advanced Micro Devices, ticker AMD. We can see year to date the stock is up a nice amount, up 64%, and we can see from its kind of year to date high, the stock is down nearly 19%. If we take a closer look, AMD looking at forward PE ratios, I think this is important. Many people are going to look at AMD at their current trailing 12 months PE ratio and be like, Jose, this is a company with PE ratio of 500. Get out of here. Okay, that's fine. I mean, if you like to look at trailing 12 months for a company in a cyclical market to some extent that's kind of overseeing one of the worst inventory corrections in the consumer electronic space. If you want to be a little bit more forward thinking, and that's how I look at some of my companies, or most of my or all my companies, we can see PE ratio forward is roughly 38. I don't think that's that bad, especially for a company that is really entering into the, not entering, but is a real competitor in the data center market and really has kind of a nice strength in AI accelerators like the MI250 and the MI300. Now, if we take a closer look at forward 1 year PE ratio, so that's next fiscal year, PE ratios are closer to 25. Again, I've talked about AMD in the past, and I do believe the market is underestimating how much growth this company could see with AI, and they're putting too much faith in my number one semiconductor, NVIDIA, which is my number one position. AMD is my number two, and I do believe right now this is looking pretty attractive at these levels. We can see the company is positive in free cash flow. They are positive in huge amount of cash and short-term investments, and roughly we can see total long-term debt of roughly 2.5 billion. So overall, financially, I'm super excited. I don't believe this is a company that's going anywhere anytime soon. Like I mentioned, one of my biggest bull case for AMD is their data center space. Within the data center space is obviously the AI market, which is a subsection in there, but they have the MI250, which is seeing great traction right now, the MI300, which is getting great kind of exposure or kind of great at least talk about right now. The company is also being a leader in their server CPU with the Epic line, and I do believe they are going to continue. And the company also did a recent acquisition about a year and a half ago of Xilinx, which also helps them out with other AI positions like FPGAs, like other forms of accelerators, and other forms of system on chips. So the first company that I really do enjoy is AMD. I do believe in the low 100s, and in the low 100, it does give me that small dollar cost averaging opportunity. Like I mentioned, AMD is already my number two position in my portfolio, so I'm a little bit more conscientious of when I add this one because it's already such a big position. Now, before we go any further, I just want to say thank you all for the support. If you guys haven't subscribed to the channel, please hit the sub button. We just hit 27.2. I'm trying to hit 27.3 this week, or actually by the end of the day. So if you can help me get that, we're trying to hit 30,000 by the end of the year. If you enjoy semiconductor companies and want to learn more about them, I do have a membership program where I talk about, I have weekly exclusive videos on semiconductor companies. I recently did an AMD exclusive video on their data center market. If you want a special offer for the Fool.com, check out Fool.com/Jose for my special offer there. And if you just want a free newsletter, check out JoseNajarro.substack.com. Finally, I want to thank The Motley Fool for sponsoring this video, and check out Fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode. All right, so now we took the closer look at my first company. The second one I'm really enjoying right now is Tesla. Now, Tesla is a very small position in my portfolio. I don't think it makes it in the top 10, but I do want to increase my overall position size here. Year to date, the stock is up over 106%, and we could see from its kind of year-to-date high, the stock is down roughly 24%. And I mean, I think every investor is there. Investor focuses in a different market. For me, I really focused in the semiconductor space in the lows of October's with companies like Nvidia, like AMD, and that's why I didn't take the opportunity to really grow into certain companies like Tesla. I know a lot of people might be saying, "Hey, Jose, you missed the boat on Tesla," but not really. I just focused in another market. Now, when I'm trying to kind of not escape, but diversify outside of the semiconductor space, I'm trying to get in maybe some other tech and AI space. And I do believe Tesla is giving me an opportunity right now, again, for that small dollar cost average. If we take a closer look at PE forward ratio 65 and forward 1 year 45, we definitely see this as more of an expensive company. I personally am not looking at Tesla as an automotive company, right? And that's such a weird thing to say. And I do believe that's why, for me, it's such a small position, right? It's more of like a growth story from here. And I don't really want to make it a huge position at the moment. Financially, the company is fine. Look at that kind of cash and short-term investment of roughly $23 billion, free cash flow trailing 12 months of $6 billion. And we can see total long-term debt of roughly $1.6 billion. A company that's not going anywhere. What I'm really excited about Tesla is their core technology. I do believe they are a huge leader in the AI market, and obviously maybe not in the autonomous vehicle like we're seeing right now. You have other players like Cruise who actually have autonomous driving going around. Tesla is playing it in a different way. I do believe that different way that they're playing with the kind of camera and more vision learning, I do believe that has a huge opportunity, not just for autonomy in the automotive, but in also other robotic segments. So when they kind of announced kind of that Optimus robot or their Tesla robot, I thought it was such a great move. The company also creates their own silicon infrastructure. They have their own chips, and they just talked about turning on their super dojos, their dojo supercomputer, which they mentioned they're going to continue to invest in. It's going to be one of the top supercomputers in the world. I mean, like I mentioned, Tesla, in forms of AI robotics, they have the Tesla bot. Obviously, for the silicon, they have their FSD chips, which goes in their vehicles. Then they have their Dojo chip, which is used for training chips to some extent. And then they have their Dojo system, which is their supercomputer. So for me, like I mentioned, I know Tesla is already a big player. They are a nice player in the automotive market. If you kind of look at Tesla as an automotive company, I do believe this is a company that is completely expensive. But if you're looking more of a forward thinker, and unfortunately, the crazy thing about that is it might miss, and it might not make it as that AI company and that kind of machine learning company and that robotics company that I can see this moving into. If it doesn't turn into that, then obviously my thesis will be wrong, and I will most likely be overpaying for Tesla, but I'm willing to wait. And like I mentioned, Tesla is not one I would make into my big position at the moment because of the valuation and because of the other markets like the automotive that it's in. But I do believe it's great to maybe have a 3-4% position in my overall portfolio and kind of increase it from the maybe low single digits where it's at right now. So I really like Tesla at the moment. Now the third company that I want to focus is a very hardware-based company, right? This is one with very kind of competitive market, but they are kind of making their own way within this space, and that is Super Micro Computer Inc. For those that are not familiar with Super Micro, this is a company that designs servers, right? They are super small, market cap of roughly $13 billion. We could see year to date, the stock is up over 195%. From its year to date high, the stock is down roughly 30%. So we can take a closer look. PE ratio forward for Super Micro is roughly 14.8. Forward 1 year is 12.6. So nothing screaming expensive. Again, this is a market that they don't have really too much of a moat to some extent. One of the biggest drivers that's kind of making them a little bit different is how quickly they're able to build their servers. They're also focusing in things like liquid cooling and extra type of cooling, which makes some of their products a little innovative. But I want to say at the end of the day, they really don't have any real moat. The biggest, in my opinion, growth opportunity here is that, hey, it's a $13 billion company. It's super small at the moment. They are definitely riding this AI wave, and they can grow massively thanks to the AI wave that I was just talking about. I mean, we take a closer look at their most recent earnings. They did mention that they continue record demand for AI related systems at rack scale, the H100, the A100, a lot of NVIDIA systems, but they are also getting strong demand from Intel's Gaudi 2 system and AMD's MI200 and MI250 system. If you are a huge follower of NVIDIA like me, every time NVIDIA releases a new product, you always see Supermicro being one of their team members that are working on getting supplies right away. So I do believe Supermicro can definitely ride this wave. It's not that expensive. Supermicro is not in my portfolio at the moment, but it's one I'm thinking of adding right now, especially if I want to kind of ride this AI wave and not just focus solely on NVIDIA, especially since we are getting some traction from Intel. We're also getting some traction from AMD, and we might be getting some traction from some other AI accelerators. So I do believe Supermicro looks a little bit better. I recently did a video on Supermicro and their earnings. Make sure to check that out. And in that video, I mentioned that maybe I wasn't too prone to the stock because I had too much exposure into NVIDIA. And I do believe this is going to move like NVIDIA very closely. But I do want to say this is a company that can also benefit from other players like AMD and Intel. So for that reason, I might be changing my mind at the moment. And Supermicro is looking pretty interesting. If you guys haven't checked out, I do have a semiconductor podcast channel. The link is down below. And Billy and I are releasing a video tomorrow on Friday. If you guys haven't, if it hasn't come out yet, and we talked about their earnings, and we are seeing that insiders are buying the stock right now at these levels. So that's also giving me another bullish case for this company at these current levels. Supermicro, I want to say, is not the best financially. They do have a little bit more total a little bit more debt than cash and short term. Actually, no, I was reading that wrong. They have plenty of free cash flow. They have plenty of cash and short term investment and very small total long term debt. So overall, nothing I would be worried about. And financially, I think this company is fine and can definitely ride that AI wave. Now, the final company I want to take a closer look at is one that I recently added before the stock jumped up. My price point here for Palantir is in the $8.60. It's in the mid to high $8, so I'm super excited. This is closer to like 3-4% of my portfolio. This is one I want to add. Year to date, we can see that the stock is up over 124%, but we can see from its year to date high, the stock is down 28%. I already did buy a decent bulk load at those $8, but I want a small dollar cost average over time, even if it means I kind of mess up my dollar cost average position, right? Or my cost basis. We can see for Palantir, maybe PE ratio is not the best. PS, price to sales ratio, I want to take a closer look at. Forward is 13.87. Forward 1 year is roughly 11.68. I really would want these to be below 10. I do believe that's when there's better opportunity. But right now we're kind of close to there where I don't mind doing a very small dollar cost averaging at the moment. The company has plenty of cash and short-term investment, no total long-term debt, which is amazing, and it is positive in free cash flow. So financially, I'm super excited about this company as well. For those that don't know, I come from the engineering field, right? I have a master's degree in electrical engineering. I worked at some great companies. One of my recent jobs before I started doing YouTube for full time was General Dynamics. For those that are unfamiliar with General Dynamics, this is a government contractor company. We deal with a lot of government customers, and I got to see the ins and out of that industry, right? And we know Palantir has huge momentum in the government. And one of the things that really excited me was in early this year when we saw their AIP, their AI platform, and I thought that was a game over. Once I saw that, that's when I ended up buying at the stock, and I do believe it was one of my best moves this year so far. And right here we can see from their overall earnings, they mentioned as a result, the demand for AIP is unlike anything we have seen in the past 20 years. We are currently in discussion with more than 300 additional enterprises to deploy AIP within their organizations, all of which are searching for an effective and secure means of adapting the latest large language models for use on their internal systems and proprietary data. So we can see AIP is really kind of going into the enterprise market. What really got me excited first was obviously in the government market. I thought that was a huge kind of lead compared to where I see the market, right? I was just working in companies that deal with government contracts, and I'm really, really excited about AIP and what that has to offer. And I do believe it's a great opportunity that Palantir can definitely gain. It's obviously something that's not going to get revenue right off the bat. Companies need to test it out and really kind of approve it before they kind of make the final push for it. But I do believe there's great opportunity here for Palantir. I would want this to get obviously a little bit cheaper, but I do believe at these price points, I don't mind restarting that small dollar cost averaging position into this company. So these are the 4 AI stocks that I'm keeping an eye out. Let me know what you guys are thinking and what stocks you guys are keeping a closer eye out. Take care, have a good day, and see you next time.